Welcome again to REIWA.com TV.
Hi, and I'm Charlie Gunningham. In this episode, we'll be swanning around the prestigious suburb of Claremont and talking to some absolute legends of the real estate world.
But first this month, the very latest property data hot off the press. Now, we could well be on the road to recovery. There's some good news in the rental market, with both Perth and some regional markets recording increases in rents for the first time in 12 months. And that may well point towards the start of an upturn in property prices. Here's Alan Burke, President of REIWA.
With increased rents, some investors will come into the market attracted by higher rents, higher yields. And as that starts, some of the tenants who may have gone and rented then decide, no, I'll now buy. And we'll now see an increase in sales to what were tenants. They'll become first home buyers. So yeah, we're looking at that as the trigger point for recovery.
But average house prices for the Perth metro area in the March quarter have fallen. The figure stands at $472,000, suggesting a fall of 3.6%. But once all the data is in, REIWA believes that figure will be nearer to $485,000. That's still a fall in prices, so maybe the message is getting through at last that something has to give if you want properties to shift. More have been sold this quarter, so volume is up, albeit still well below historical levels. For example, December sales data saw a seasonal but dramatic 30% drop. But there's evidence to suggest that the March sales are up 50% on December. Here's Alan again.
We're seeing sales of about 1,000 properties per week, so that's good signs. We're up from 950 a month ago and indeed 950 a year ago. So we're on the cusp of greater activity. We're seeing, I think, an intake or an uptake of something in the order of 5 to 8% in the March quarter on the December quarter. So volume's up, which is a good sign.
But that's not hiding the fact that sales in Perth remain 25% below the 15-year average, while regional WA is still down some 35%. The level of listings remains a critical issue, and it's expected to keep downward pressure on prices in 2011 and mostly into 2012, as there's no circuit breaker to get the market moving back to normal levels. Meanwhile, land sales are continuing to soften as the new build market stalls, with the lack of trade-up buyers and investors who make up the majority of the new housing market. Stuart Darby from REIWA.
Look, importantly, I think it's, you have to understand that the new housing market is predominantly driven by trade-up buyers, and they're people that are actually coming out of an established house and building a new home. So, of course, if you've got a very slow established market, they can't sell their house to be able to then commit to building a new house. So it's basically, we're in a bit of a bind until such time as we can start getting the established market moving. So too the new housing market will be slow probably.
Overall, the market certainly has more positives than it did when we looked at the December figures. So perhaps the outlook is cautious optimism. Alan Burke again.
Always optimistic, yes. It's going to take us 12 to 18 months to get rid of the stock in the marketplace. But the optimism in the economy, the Chamber of Commerce outlooks for the economy in the next few years, all very positive, all going to happen, but it's just going to take a little longer than people would hope.
Going up or going down, whatever the property market's doing, we've come to a suburb with a reputation that's rather nice. Claremont is renowned for being the home of exclusive boutiques, classy cafes and expensive schools. They say it's the place to be seen, the place where ladies lunch and the only place to shop. And if it wasn't always true in the past, well, it might be now. The recently opened multi-million-dollar Claremont Quarter precinct has raised the bar with regards to world-class shopping experiences for Perth. It's one sophisticated retail centre with over 60 specialist shops, a town square and alfresco areas covering 30,000 square metres. This prestigious western suburb came from pretty humble beginnings. Just 10 minutes drive southwest of the city centre, it nestles around Freshwater Bay on the Swan River and was one of the first suburbs to be established in Perth. A settler from Liverpool called John Butler set up an inn here to attract travellers on the road between Perth and Fremantle. A community grew around what is now Victoria Avenue, and in the 1870s, the Trigg and Stirling families, amongst others, bought land in the district and settled into what is now the Christchurch Grammar School and surrounding areas. Some of their homes have been maintained as school buildings. The community's focus shifted when the railway line from Perth to Fremantle came through in 1881. The versatile showgrounds are home, of course, to the Royal Show each year and a variety of other events. And we mustn't forget the beautiful foreshore down here on Freshwater Bay, with yachting, fishing and lots of other water sports on offer. And then, of course, the tennis courts, cricket nets, parks and playgrounds. Claremont certainly offers a first-class lifestyle, and that lifestyle certainly comes at a price. Claremont is in the top 10 most expensive suburbs in WA, with the average house costing a healthy $1.25 million. But that's fallen 3.8% over the past year. No surprise, though, that it remains one of the most desirable locations in the famous western suburbs Golden Triangle.
In the mid-70s, the early 80s and the early 90s were quite sustained periods of very, very low activity. So this is just an adjustment phase.
Well, you find that markets get overbought, and that's the situation we had from a period of about 1998 through to about beginning of 2008. So the prices went well over the long-term median growth rate, and you know that that's going to correct at some stage. It's going to be an event, and we've had several events that have brought the prices down and slowed the turnover in the marketplace. So it's been a fairly, whilst you're in the middle of these things, people get very confused, but there are reasons, and as before I said, it's that lack of confidence that feeds on the market itself, the lack of capital that occurs because you've got governments competing for capital in the market to fund their building programs. You've got banks that are trying to shore up their capital bases so they're not lending as much. So generally there is liquidity issues, and the amount of money available for housing has just reduced.
We'll all get out of it. Eventually pent-up demand will ensure that all these properties sell. If you don't need to sell, take your property off the market and rent it out. Or if you do need to sell, adjust the price, follow the advice of a good REIWA agent.
Well, my advice would be to price very close to value on your property, and you might like to get an independent valuation that does that, or deal with an agent that provides you with the trends in your local marketplace, showing you the sales of like properties and how long ago those property sales occurred. You also need to take a really good snapshot of your competitive position in the marketplace. So you look at how many other houses in your suburb are for sale at or around your price, and you've got to make a decision to price yourselves very competitively against those to win the advances of a buyer.
Well, markets rise and fall, and we're just going through a period of consolidation, catching up on all those gains that we made in the earlier part of this decade. And the market will come back. Property in Australia is a great long-term investment, and we're looking at a consolidation into a longer-term phase.
Markets do recover, and whilst we're in a stage now where we're probably getting into a stage where our markets are going to be oversold and prices reduce, they will then start to turn around, and there's enough economic activity in this state looking down in the next 5, 10, 15, 20 years to ensure that they are in the right place for good property growth.
So there's a snapshot of what's happening in the property market. If you'd like some more information, you'll soon be able to get hold of REIWA's market update. So keep watching this website for more information.
Next month, we'll have more news from your local real estate agents and take a look at some northern beachside suburbs.
And we're going to be finding out what additions you can make at home to save you money and potentially make you money in the long run. We'll see you then. Bye-bye.
Bye.